The broadcast is now starting. All attendees are in listen-only mode.
So, good evening, friends, and welcome on Connect Easy once again on this special webinar on reporting for tax audit. So, today we have a great personalities with us, CA Vikash Jain sir and CA Palak Pavagadhi sir with us. We welcome both our faculties. Thank you so much for joining, sir. So let me introduce first CA Vikash Jain sir, who is our today's chief guest and a keynote speaker. Uh, Obviously, CA Vikash Jain sir is so famous and did not require any introduction in a CA fraternity, in a tax audit fraternity. But as a formal introduction, would like to introduce sir is RCM WRC of ICI, partner at Weekend and Company Chartered Accountant. Sir is from Ahmedabad, also a past chairman of Ahmedabad branch, which is one of the biggest branch in entire India. So let me introduce sir. Sir is also an insolvency professional and also a partner in Weekend and Company Chartered Accountant. So highest number of votes for both the terms of regional council is got by sir, and all the records of the past councils, past regional council is broken by sir. So sir is actually not as a member, but sir is as in just not seen as a voter, but in every chartered accountant or many chartered accountant is connected with sir by directly by heart. So with this word, would like to welcome you, sir, and would like to request you to give your keynote address. Deliver your keynote address. Over to you, sir.
Thank you very much, Virag Bhai. First of all, I must say the heartiest congratulations to you for selecting such a wonderful topic. I must compliment you because this is the need of the hour. And more than that, again, I would like to compliment for having the faculty as Palak Pavagadhi, sir, because he would be doing great justice to the topic, and he has delivered maybe hundreds of lectures on this topic, and his authority, I would say, dealing in such a nice and easy to understand language. So I must compliment you, Virag Bhai, for having today's session, and that too with Palak sir as the faculty. So my kudos to you. And when you said that I got the highest votes, but that is not what I got, but this is only because of the friends, well-wishers, colleagues like you all who have shown their trust in me and have always stood by me in all these processes. So it is something which is not my achievement, but it is the support and help of all the friends. So I dedicate it to all you all. It's your achievement. Today, I will not like to stand much between you, that is all the participants and the faculty, because I know that there is a lot that is to be delivered by Palak sir. But before that, only 2-3 important things which I think that I must share with the members. One is, though there are so many senior professionals, at the same time so many youngsters might also be attending this particular program. So all must say, on the technical side of the subject, Palak sir is definitely going to touch. But I'd like to request that please take care of the limit of the 60 audits that is applicable to all the chartered accountants, that whenever we are doing the audit, there is tax audit specifically, I say tax audit, the limit is 60, that we all must be aware of. So there are many notices that have been issued, which is very unfortunate or sad part, because now income tax department is having every record based on the PAN number of the auditor. They are having every record. So there are cases wherein the auditors has signed more than 1,000 audit report per auditor, and subsequently those cases have come for disciplinary action also. Complaint has been filed with the institute and all these things. So we must take care of that. The only thing is, if there are A, B, and C, there are 3 partners in a firm. So the limit is 180, including the entire firm. So even if partner A may sign 100 reports, that is okay. But the total limit remains 180, 60 into 3. So that is not a problem that we should all take care of. Another thing is UDIN. So UDIN is a beautiful concept, we all know, which the institute has introduced, and subsequently now the same is also being followed by CA, the company secretaries, cost accountants. All the institutes are also having now the system of UDIN. So we all are aware that we can generate the UDIN within 60 days. So that again is very much important, and that UDIN which has been generated needs to be consumed within the next 30 days. So many a times, sometimes the client comes to us he might have not get the audit done on the last day, till the last day, and then he would be requesting, "Arey sir, backdate mein generate kar do na, kya farak padta hai, and audit file kar do, this that." So again, my humble request, my suggestion, जिसको आना है वो टाइम से आ जाएगा. At the most, what we can do is we can issue them the reminders. We can request them to come on time. If they are not coming on or before the time, then there is no point increasing our this blood pressure or pulse rates. Rather, we should do our work calmly, because what I've seen is most of the cases of the disciplinary or the problems are when under pressure. It is not because of the ill intention or the wrong intention of the chartered accountant, or he doesn't know anything. No, it is not the case. But the problem is, it is like Sachin Tendulkar also becomes may fall down to the bowler for 0 runs when he is having tremendous pressure of scoring at the rate of 18. So same is the case when in the last 2-3 days we have to do so many audits, and then the problem is, and believe me friends, there are some such kind of clients who always knowingly goes to the last day to the CA in the last dates, so that the CA साहब ज़्यादा कुछ देखेंगे नहीं. That is what the mindset is. But we must safeguard ourselves. हमको खुद का ध्यान भी रखना बहुत जरूरी है. If we are not able to take care of ourselves, the things are tough. Audit trails, electronic trails, these are very, very important these days, and nobody can save. So though we are not doing wrong, but just to help others and just in the less time we have to do more work, we succumb to such kind of pressures and mistakes are done. And believe me, when there is a problem, nobody comes to our rescue. It is only the paperwork, documentation, and the work that we have done, which we have demonstrated, that only comes to, if we can demonstrate the things, then that only can save us. Nobody else can. So what important thing that comes out from this discussion is documentation. So it is not necessary that public documentation is required, important only in case of companies. It is required in all cases, all the audits that we are doing, whatsoever small that audit may be. The only thing is the nature and extent of compliances in that audit documentation may be lesser. If you are doing some audit for a large corporate, so the extent and nature of documentation may be greater, but in case of smaller firms, it would be lesser one. But we need to strictly comply with the SQC1, that is the standard of quality control. We have to that in place, and documentation, all the documents and audit papers are very much important for us. Audit evidences, SA 250, all these things are to be taken care of. That is very much important. Recently only I came across a case. See, when there is a company, we are all very serious कि बहुत ध्यान से करना है, especially which is going concern, बड़ी company होती है. But when it comes to smaller company, जब बहुत छोटी कंपनी होती है तो लोग सोचते हैं इसमें तो क्या ही देखना है, फीस भी कुछ नहीं है, 10,000 रुपया मिल रहा है, टाइम भी बहुत लग रहा है, and then we do not do the kind of necessary kind of due diligence that is required to be adhered to, and consequently there are problems. अभी एक partnership firm wherein there were 2 partners, and most of the time what happens, one of the working partner or the managing partner, he normally walks to the CA office and he do all the formalities and everything. और जब साइन करने का होता है तो वो घर ले जाता है, we get the balance sheet and everything signed, and then say to CA कि सर मेरा भी साइन हो गया, पार्टनर का भी साइन हो गया, अब आप भी देख लीजिए, and CA used to sign that. Recently there was a case wherein another partner said कि I have never signed off this balance sheet. There is the CA and the another partner, they have colluded and they have done all the wrong whatever has been done. There is nothing to my information. I am not aware of anything. So you will just relate with this example. In most of the cases, maybe in case of company or in case of partnership firms, what we see normally only one person or one director or one partner, or in case of trust, one trustee comes to our office and not all the person. And we used to do the signatures and everything. So maybe the time is changed, the way of working is changed. Gone are those days when we used to have such kind of loyal clients, blind faith on each other, and we used to do the things. Friends, we can trust, that is okay, but at the same time the compliances are to be done the way they have to be done. So maybe we need to call them to office for the signature, or if that is not possible, we should send somebody to their place and get the signatures done in front of you, in front of our person at least. So these things have become very, very important. These are very, very small things. In case of partnership firms, we have seen even cases where there was a withdrawal in the partner's capital account, and that balance sheet was signed and the auditor also signed, because partner's capital withdrawal, even if it is in cash, nobody takes care of or nobody bothers for that. But subsequently there was a dispute. One of the widow, she alleged that the CA and other partners have colluded, and other partners have siphoned off the money from the firm, and I have never received any amount, but however it has been showed as debit in my capital account that I have withdrawn the amount from this firm. So there are ample examples and number of examples to understand all these things. And at the end of the day, before this, I would like to make two more requests. One is KYM, know your members. That form is there in the SSP portal. As you are aware of that now, it is mandatory for all the chartered accountants to file this form KYM. There is know your member. And a fee payment last date is 30th September. All the chartered accountants need to pay their membership and COPP before 30th of September. So if we have not updated KYM, we are also not able to pay our fee. And subsequently, what happens if, for example, maybe in the last year or something, this due date was extended by 7 days for some reason or other. So 30th September became 7th of October for filing of tax audit. And in the work pressure, people forget to submit their membership fee. And what happened on 3rd, suddenly when they were supposed to upload some of the audit, they came to know that array, membership or COP has expired. That fee has not been paid, and they are no more members. So if they want to restore it again, it takes time, and then they were not able to upload there. So see, 30th September, luckily 30th is the last date for membership fee, COPP, and 30th is the last date for tax audit generally. But what if it is extended by 7 days, and because of some reason or other, if in the work pressure we forget to pay that membership fee, that becomes a problem. And I have seen more than 20-30 cases in the previous year. So we need to be very careful about that. KYM is also again very important, and whatever the disclaimers, notes that we are giving while doing the audit, I'm sure in case of companies we are very serious, but in case of partnership firms and others or proprietorship concerns, normally we used to do the cut, copy, paste, and not taking that seriously. Palak sir, definitely along with the tax audit provisions, we'll throw some. I'll request we'll throw some light on this part, which is again very important. People, I won't say everybody, but many of the people don't take care of that, and that becomes a serious issue at times when the things come up for disciplinary. So over to you, sir, and thank you very much for being there to enrich our members, and wish you all the members a very happy learning. Thank you, friends.
Thank you so much, Vikash bhai. Very apt keynote address, wonderful, to the point, and as per the requirement of the tax audit season and tax audit, and obviously know your member form, which is a new introduction by ICAI, need to be filled before the payment of fees, and then only if you fill that form, then only you can eligible to pay the fees as well. So thank you once again, Vikash bhai, for the wonderful keynote address, joining despite of your busy schedule. You have given us your time and sharing your knowledge and about the institute. We are very thankful to you, sir. Thank you so much, sir.
Thank you.
Now let me introduce our today's guest speaker, expert on the topic, CA Palak Pavagadhi, sir. Sir is a proprietor at Pavagadhi Shah and Associate, founder and promoter. Sir is also a mentor, business coach, direct tax advisor, management consultant, virtual CFO. Sir is a global tax advisor, income tax buff, law geek, gold medalist, and educator as well. So this is a brief profile. Let me introduce a full profile. Sir has an expertise in a professional experience of more than 24 years. Yes, sir. Yes. So, sir is on a mission to serve, educate, and contribute to the nation with a little yet significant piece of advice. Sir is a founder at Pavagadhi Shah and Associate, mentor at MBRES Consulting Service LLP and Aspen Consulting LLP. Teaching young mind is one of sir's many passions, due to which sir is fortunate to train more than 7,500 plus chartered accountant. Sir is expertise in litigation and assessment procedure both on national and international standards. Sir is proud to handle a global clients to and be a board committee member of Global Business Roundtable, representing India in the investment committee. Sir is a co-opted member at BOS Academy ICI at New Delhi. Sir is a deputy involved in the process of framing allied laws as a member of Corporate and Allied Laws Committee ICI. Also gave remarkable contribution in reviewing financial of Indian listed company as a member of Financial Review and Restructuring Board ICI. Sir is a direct tax blogger for a regional newsletter, Gujarat Mail. Sir is also invited as a speaker on various forums on the subject of direct tax at national level. with this brief introduction, we welcome you, sir, and thank you so much for accepting our invitation. And because of you, we can organize session on very timely manner. Like we already seen that ITR series completed on 31st July. Many professionals are expecting extension also, but we now know that there is no extension, and so everyone is on work on tax audit. So on immediate, we also have organized with the help of your timely sharing knowledge with the members. Thank you once again, sir. So over to you, sir. You can share your screen as well, sir. Yes, sir. Screen is visible. So meanwhile, would like to request each and every member who is joining on GoToWebinar to post your question in the question tab. At the end of the session, sir will take the question answer session. So it not only a one-way session, it become an interactive webinar. So with this announcement, I would like to request sir to take the proceeding ahead for our today's session. Over to you, sir.
Good evening, everyone. Virag sir, Vikash Jain sir, seniors, and my dear friends. Indeed, I'm very thankful to Virag Bhai for giving me this opportunity. As the tax audit is a very, very hot topic every year, because still for medium-based chartered accountants or even big chartered accountants, this is one of the basic area of the practice which I believe no one would like to give up. Vikash Bhai has rightly said many important things about ICAI. Vikash Bhai is our legend of Ahmedabad, Western region, I would say, and he is expert in many fields. Moreover, he is a very dear and near friend of mine. So I'm very thankful to Vikash Bhai also for sparing the time and enriching the member, enriching all of us on certain developments, important developments at ICAI level. Coming to the topic proper, tax audit under section 44AB. I would have my discussion on clause-wise analysis, and along with that, we will be discussing how to make ourselves safe. Because as Vikas sir has rightly pointed out, that client will come always at the last moment. There are many clients who believe कि जितना last में जाएंगे ना, उतना हमें कम queries raise करेंगे. But हम जो queries raise करते हैं, that is for the benefit of the client. And ये last moment पे आने वाले client का भी work तो हमें करके देना ही पड़ेगा. But the important is to make ourselves very, very safe. And how to make ourselves safe. For the same, we will also be discussing in the different clauses. Plus, I would also be highlighting on this 60 audit limit also, which is a very, very, I would say, burning issue. Starting with two parts of form number 3 CD. Part A talks about clause 1 to 8, which is general in nature. Part B talks about clause 9 to 44, which is, I would say, various specific clauses of the form proper. Let's start with clause 1, part A. It talks about name of the assessee. Now, as far as the name of the assessee is concerned, there is nothing new, nothing important, I would say, but still there are 2-3 issues I wish to pick up here. Those 2-3 issues are, number 1, कौन सा विराग भाई हिंदी इंग्लिश रखूं चलेगा ना या ओनली इंग्लिश? We'll keep English. Is that fine?
Yes, sir. Sir, but few of our participants are also from South India.
So I'll make only English then. No worries. I can make it only English also. बीच में कहीं कहीं आ जाएगा हिंदी तो प्लीज पार्डन मी, बट provisions would be only in English. Address, sorry, name of the assessee. The name of the assessee whose accounts are getting audited. Now, name should be as mentioned in the permanent account number, PAN card. Like if it is my audit which is carried out of my proprietorship firm, then I should name it Palak Pavagadhi. But assume in my PAN card the name printed is Pavagadhi Palak Bhaskar, it should be written Pavagadhi Palak Bhaskar. Now my proprietorship name is Pavagadhi Shah and Associates. Then I can mention in bracket proprietor Pavagadhi Shah and Associates. But the audit is carried out for my permanent account number. So audit is done for Pavagadhi Palak Bhaskar, so that should be kept in mind. Now assume the audit is carried on for a partnership firm, and my partnership firm is say Pavagadhi Shah and Associates on 1st April 2022 for the year for which we are auditing in the beginning. In between the year, Mr. Shah got retired, and assume Bhatt is admitted. And now on 31st March 2023, the name of my firm is Pavagadhi Bhatt and Associate. Question arises, which name I should mention? If there is a change in between the year for the partnership firm, then I should state the name as on the last date of the financial year. That is Pavagadhi Bhatt and Associate, I should state. Same way, I should, if at all wish to mention, I should mention in the notes that there is a change in the name. Otherwise, my name, which would have been changed in the permanent account number also, would now be Pavagadhi Bhatt and Associates. Assume there is conversion of partnership firm into company on say 1st July 2022. Then there is no problem, because from 1st April 2022 to 30th June 2022, it would be the audit report of the partnership firm, if at all covered by the audit, and thereafter it would be the audit report of the company. So there would be two audit reports. So this particular point of putting up, I mean, if the point for the change of the name will not come, because there is altogether the change in the assessee. It was earlier the firm, now it is the company. So there would be two audit reports, one for 3 months and another for 9 months. So the particular issue will not arise. So the first one, name. Second, the address. Nowadays, the physical address is not having much relevance, as nowadays your portal is your address, your email ID is your address, your mobile number is your address. But still, you have to mention the address which is existing to the assessee as on the last date of the financial year, and make a point to get it changed in your PAN card also, make a point to get it changed in your portal also. PAN number should be quoted. What we do generally is, whatever is quoted last year, we are copying and pasting if it is an old audit. But if it is the new audit, then what we do is advisable to procure a copy of the PAN card. The reason is pretty simple. What generally we do in our office in hurry of completing the audit work is, we call the client, keep the mobile on our ears and two hands on the keypad, saying, boliye, yes, please go ahead with the PAN, and he'll say A, G, P, F, S, 1, 2, 3, 4, Q. If by mistake 1, 2, 3, 4 O ho gaya, then I am afraid the things will be pretty problematic. Keep it this way. Get the copy of the PAN card, and WhatsApp he can definitely do, and please do the needful accordingly. So PAN number. Details of registration number under the indirect tax law, GST registration or any other indirect tax registration need to be mentioned here. Now the issue important is that if my client is registered under the GST, mention the GST registration number. But assume my client is providing the services of outsourcing of accounting. What he does, I have a client in Ahmedabad. They are managing the back office work of a US entity which is into the manufacturing of certain goods and assembling in USA, selling in USA. But the whole back office is maintained over here. All drawings are done here. It is accounting work is also done here. The client is raising the invoice to the US entity in terms of dollar. We get the money also in terms of the foreign currency, which is credited to our bank account. Now, if I'm not mistaken, this type of transactions are called export of services and tax exempt, GST exempted. We don't have to pay any GST on the same. But my turnover, my gross receipt from this transaction exceeds the specified monetary limit under the GST, that is 20 lakh rupee for the service sector. In that very case, is client supposed to get itself registered under the GST? Answer is yes. If he has registered, we have to mention the fact. But assume the issue is he has not registered himself under the GST. He is required to get himself registered. His gross receipt is say 1.2 crore. And as it is about 20 lakh, he has to register, but he has not got registered. In that very case, is it our duty to mention the fact that the registration was required but not done? In my humble opinion, in the notes, it is yes. We don't report generally. We never see what is happening. We'll simply ask, is it registered? Or rather, we don't ask. We see the audit report of the earlier year. If this particular column is not filled, chaliye. Let's not, I would say, involve ourselves into any sort of other controversy, and they don't do the same. But I am clear that it is always advisable to get yourself registered, and if the registration is not mentioned, as a chartered accountant, our duty is to mention that fact that registration was required, but the registration is not done. Now see, clause 5 is pretty general. I'll not be wasting much time on the same. Individual HUF form, AOP, whatever is your status need to be mentioned. It's not residential status, but it is the nomenclature of the assessment. Clause 6 and 7, sorry, are also general in nature, previous year and assessment year. If mine is a broken previous year, like I was talking about that partnership form converted into company, partnership lead the business from 1st April 2022 to 30th June 2022, that fact need to be mentioned that my partnership is closed on 30th June 2022. One. Second, my company started on 1st July 2022. It ended up to it lasted up to 31st March 2023. Then I have to mention the fact that for company also it is a broken period of the previous year, 1st July to 31st March 2023. So that would be the previous year. And as far as the assessment year is concerned, it is assessment year 23-24 for the year for which we are filing the audit report. And now the actual mechanism begins. Clause 8. The relevant clause of section 44AB under which the audit has been conducted. Now please listen. It is under which relevant clause the audit been conducted. Auditor has to report the clause under which the audit is being conducted. I'll go for two different types of illustrations. One for business, another for the profession. And from that, I'll try to clarify that how this 60 audit limit is calculated for one chartered accountant, one COP holder. Let us put this way. My client's turnover is about 10 crore. I am covered by audit. My client is covered by audit. Under which clause my client is covered by audit? It is 44ABA. My client is covered by audit. So straight away, it would be 44ABA. Second, my client's turnover is 60 lakh rupees only. It's a partnership firm. Turnover is say 60 lakhs, which is below 1 crore. Cash transactions, maybe any amount. That proviso to section 44ABA is not going to be applicable to my client. As it is 60 lakhs, assume my client is showing his taxable business income to be 6% of the total turnover, that is 360 or more. then my client is not required to get the books of accounts audited. If my client is not required to get the books of accounts audited, then there is no question of audit coming into play. But assume my client is declaring his taxable business income to be less than 6%, that is less than 360. Then he is covered by audit. He is covered by audit not under 44ABA, but he is covered by audit under section 44ABE of the Act. And hence, what would happen is that here my important issue will be that my client is going to be covered by the audit. Third, very important issue. If assume the position is that my client is having turnover, which is, say for example, 4 crore. If the turnover is say 4 crore, then in that very case, the point is cash transactions. Assume the cash transactions of my client does not exceed 5% of the total transaction. Can I say is not covered by audit? And if it's not covered by audit, then in that particular case, no audit requirement is there. But assume that my client's turnover is 4 crore and his cash receipt exceeds 5% of the total receipt, or cash payment exceeds 5% of the total payment. In that very case, can I say my client is covered by audit? My client is covered by audit under 44ABA of the Income Tax Act. Proviso to 44ABA is covered, and I have to compulsorily mention that particular fact that my client is covered by audit. Next one. Assume my client's turnover is 1 crore 60 lakhs. Above 1 crore, to which that proviso to 44AB is applicable. Below 2 crore, wherein he specified assessee for section 44 AD also. Now, if my client's turnover is 1.6 crore, and if it is 1.6 crore, my client's turnover is, wherein my position is that my client's cash transaction doesn't exceed 5% of the total transaction, that is neither the cash receipt nor the cash payment. His turnover is 1.6 crore and he is ready to show 6%. He is not covered by that. But if he is not ready to show 6% of 1.6 crore, then in that very case, what would happen is if he is not showing 6%, then he is covered by audit. He is covered by audit under section 44 ABE. He is covered by audit as per 44 AD. That means 44 ABE is covered by the audit. And important is here, my client would be having the audit under 44 ABE. 1.6 crore, cash transaction doesn't exceed 5%, and below 6%, it is 44 ABE. Now try and understand. My client is ready to show 6%, but unfortunately his cash transaction exceeds 5% of the total transaction. In that very case, what would happen is that my client is covered by audit. My client is covered by audit under section 44 ABA of the Income Tax Act. Under section 44 ABA of the Income Tax Act. So he has to get the audit done. Next important issue, and this is complex. My client's turnover is 1.6 crore. Cash transaction exceeds 5% of the total transaction. He is not ready to declare 6% as his taxable income. Then in that very case, my client is covered by 44 AD also. My client is covered by 44 ABA also. Which clause need to be reported? 44 AD starts with non-obstacle clause. Non-obstacle clause says notwithstanding to the contrary contained in, meaning thereby 44 AD will override 44 AB. That is what is the general view people are giving. But if we read 44 AD carefully, it says notwithstanding anything to the contrary contained under section 28 to 43C. 44AD overrules 28 to 43C. It doesn't overrule 44AB. And as it doesn't overrule 44AB, in the absence, the earlier clause, that is 44AB-A, will prevail over 44AB-E. And in my humble opinion, you should mention 44AB-A. What jugglery we will play, I am coming. But we should mention 44AB-A is my first part. Now, what would happen is, here, important is, friends, if my client is covered by profession and his gross receipt is 60 lakhs, is covered by audit 44AB directly, as the gross receipt in the profession exceeds 50 lakhs. Now, if gross receipt is 40 lakh and is ready to declare 50%, is not covered by audit. If he is not ready to declare 50%, then he is covered by the tax audit. Important issue will be which clause need to be reported, as I'm trying to highlight. Advisable to mention the clause of crossing the limit of 1 crore or 10 crore or 50 lakh. If not, and you are going for that presumptive income, then only the presumptive one. Now coming to a very important point, wherein my client is falling under two different clauses. Our institute doesn't permit, but assume Mr. X is into the business of wooden manufacturing and selling, and is also interior designer. From his interior designer profession, in his proprietorship, his gross receipt exceeds 50 lakh, and in wooden business, his turnover exceeds 10 crore. He is covered by audit under both the clauses. Would there be 2-3CD? In my humble opinion, no. There would be 1-3CD. Which clause should be mentioned? I would advise you to mention both the clauses of business as well as profession. Now you will say, sir, drop down is not permitting. No worries, put it in the note. Put it 44ABA and put it in the note. If drop down permits, but if it doesn't permit, put it in the note. But advisable to mention both the clauses. Question arises, for calculating this limit of 60 audits, what would be covered? Any audit which we are doing under 44 AD, ADA and AE are not covered. Meaning thereby, if my client's turnover exceeds 10 crore and I'm auditing him, included in 60 limits. If my client's turnover is above 1 crore up to 10 crore and cash transaction exceeds 5% of the total transaction, either receipt or payment, I am covered by that limit of 60. And in profession, if my gross receipt exceeds 50 lakh and I am getting the audit done, I am covered by that 60 limit. But in business, my turnover is up to 2 crore, I am not showing 6%. In fact, I am not covered by that proviso also, and below 6%, because of below 6%, I am getting the audit done. Then it is not covered by the limit of 60. Same way, below 50% I am showing in profession, I am not covered by the audit. Friends, very, very important here to note that this 60 limit should be please carefully observed. I've seen many cases wherein people are auditing, as Vikash Bhai has rightly pointed out, auditing more than 60 books. As now UDIN is there, as now you have to mention all the details in the audit report, there would be a direct track, and as we've seen, department is becoming so rigid, so strict. It is not at all advisable to sign more than 60 audit reports if it is 44AB direct covered one, above 1 or above 10 or above 50 lakhs. If there are 3 partners, as Vikash sir has rightly pointed out, you can audit 180 books of accounts. But important is that here important is that if there are 3 partners, then whether on all the 100 audit report, only 1 partner signing on behalf of the firm will do, or it should be all the 3 should sign 60 audits. I repeat the question. if we are 3 partners in the firm, we can audit 180 books of accounts. Assume all the 180 books of accounts are signed by me. Would it do? I'm partner of the firm. Firm can sign 180 books of accounts, or 60 by me, 60 by my partner A, 60 by my partner B. Here's what to do. Friends, if it's my firm, I would ask other 2 partners also to sign 60-60 audit reports rather than I signing 180. I've seen a firm of one of my very close relative wherein there were 2 partners. Only one partner was signing 120 audit reports. I was telling them that please don't do, but they were not afraid. Now they might have stopped, I'm confident, but if they've not, they should, because it is not at all been permitted. Clause 8A. Whether the assessee has opted for any alternate tax regime or not. This option need to be mentioned in the audit report itself, that whether he has opted for alternate tax regime or not opted for alternate tax regime. Now see friends, if I take here some important part, you all are aware that nowadays due date of filing the ITR for the audited assessee is 31st of October. At the same time, due date for filing the audit report is 30th of September. Now, this was not there earlier. My senior members who are attending this webinar would agree with me that earlier it was all 31st October or 30th September. That you file the audit report, immediately you file the return. The due date for both is similar. Now there is a change made by our Honorable the Finance Minister since couple of years, wherein the date differs. The question arises, what is the reason for keeping different dates? There must be some reason. I tell you what is the reason. The reason for keeping due date of the audit report is 30th September and return is 31st October to be. Friends and my seniors, our income tax department is planning to come out with a pre-filled return. At present, we are experiencing this in 143(1)(a), and I'll be discussing at length at a later stage. But the intention is, I am filing my audit report on 30th September. As I am filing my audit report on 30th September, what would happen is, in my audit report, I have provided that employee contribution to provident fund is paid after the due date under the PF Act. Then in that particular case, immediately, when I go to prepare my return, it would be disallowed not by me or my chartered accountant or my tax consultant, but it would be disallowed by the department itself. That is one. Okay. If I have mentioned in my audit report that my client is eligible for ATC worth 1,50,000, then automatically they will give ATC. Then they will automatically give ATC. I have mentioned ATTTA 10,000, they will automatically give ATTTA. In the pre-filled return, which is, I would say, the next level of development government is coming out with. But at present, what happens is it is not pre-filled return. So this all been taken care of by department. Obviously, when it is against us, I am clear, when it is against us, they don't allow us ATC if we have not claimed, or they don't allow us any other benefit if we have not claimed. But as far as the, I would say, disallowances are concerned, if something is reported in PF, which is paid after the due date under the relevant act, then department will come out with 143(1)(a) if you have not disallowed the same in your IT. So this is what was the intention behind keeping one due date and keeping another due date. Now what happens is that in the In the audit report itself, friends and my seniors, you are supposed to mention whether you are going for alternate tax regime or you are going for old regime. I'm talking about PY 22-23 because from 23-24 the new regime is going to be the default regime. So this clause has to be changed in 3CD. But for the year for which we are filing the form, it is old regime is the default regime. If you want to go for alternate regime, that is a new regime, then you have to mention for individual and HUF AOP BOI. Friends, company के लिए भी you have to mention the same. Issue important is that when we are mentioning which regime we are adopting, it means our ITR must be ready. And if the ITR must be ready, before the government makes pre-filling of my ITR, I will file the ITR on my own. What we do in our Gujarat, and I'm confident the same practice must be followed in other parts of the country also. We always prepare the return along with 3CD only, along with the tax audit report, friends. And as soon as we shoot 3CD, client accepts 3CD, our return goes to the department. Return is also shoot to the department. And hence, there is no time given to department for pre-filing. Same would continue even in future also, that we are ready with the return, because client is always concerned not with his profit and loss account or with his 3CD. He is always concerned with kitna payable aa raha hai, what is the amount payable by me, or what is the amount refundable by me, or what is the total tax payable. And that's the reason we have to be ready with the return and we have to decide alternate regime or old regime. And as we are deciding the same, why should we wait? Generally, when we file the report, we file the ITR also. And that's the reason, friends, what is happening is that you are supposed to have the clause which talks about whether alternate regime or the old regime. Now, these were all general clauses of part A. I would now be switching over to the specific clauses. Just a moment, please. Now, what happens is, clause 9 talks about name of the members, partners in case of AOP or firm. Clause 9A, name of the partner, member and their profit sharing ratio. Clause 9B talks about particulars of any change in the partners, members or their profit sharing ratio. I will clarify what I mean to say. Assume ours is a partnership firm in which ABC are a partner in the ratio of 5:3:2 and there is no change in the same. In that very case, what would happen is that I need to mention 1, 9A, ABC 5:3:2, 9B, NA, not applicable. But assume I have ABC who are the partner in the beginning of the year. Now Mr. C has retired, it was 5:3:2 ABC, Mr. C has retired and now A and B are in the ratio of 5:5, that is 1:1. Then I have to mention the fact that there is change. Now understand what reporting I have to do. Who are my partners of the partnership firm at the end of the year? Only A and B in the ratio of 1:1, that is 5:5, 50-50%. I have to mention the fact in clause A, that is A and B 5:5. And in B, I have to mention the fact that Mr. C deleted, B admitted, or not B admitted, but B's ratio has changed from 30% to 50%. So that change needs to be mentioned. I have here two important issues. Issue number 1. If, say for example, the profit sharing is very, very complicated, then what to do? I will elaborate what I want to convey. Assume my friends, that we have started a partnership firm. We are 3 partners, A, B, and C. And we are trying to go like the big firm. What we are doing is that we bring the work in our CA firm, not in a CA firm, we have a consultancy firm in which we bring the work, in which we are 3 friends whose wives are partner in this partnership LLP. We bring the work. There would be one person from V3 would be heading that work, and our staff carries on the work. Now, our model is that if you are getting the fees of 100 rupees from the client for the particular work, 20%, that is 20 rupees, goes to the partner who has brought the work. 20% goes to the partner who has done the work. And the remaining 60% is there in the common kitty from which we deduct the expenditure. And thereafter, we distribute net amount in the ratio of 1:1:1. So that is what is our practice. Issue is, in the first year, I could bring best work. So my part was highest. In the second year, Mr. B is able to bring highest work. So his part is highest. And in the third year, Mr. C has brought the highest work and Mr. C has done the highest work. So his part is highest. Now the question arises, every year are we going to mention that there is change in the profit sharing ratio? Answer, in the given case, it should be. And that's the reason, friends, we advise our client that if you want to go for this type of arrangement, it should be in the form of the remuneration rather than the profit sharing. Please don't keep all this in the profit sharing. Big firms are doing it, but big firms are doing it in terms of the remuneration and not profit sharing. Profit sharing has to be 1:1:1 or 5:3:2 only. That is one. Second, if my profit sharing ratio and loss sharing ratio is different, like profit sharing ratio is 5:3:2 for ABC and loss sharing ratio is 1:1:1, then do I need to mention the ratio of profit sharing 5:3:2 or 1:1:1? It should be 5:3:2. But as a note, I would advise you to put the comment that the loss sharing is in the ratio of 1:1:1. You don't put, no problem at all, but advisable to put this particular comment, in my humble opinion. Now, coming to the use of this particular clause by our income tax department. See, what happens is, our income tax department is very smart, friends. What our department will do, as soon as they see this particular clause 9B, which is reported in form number 3CD, they would apply 9 capital B section and 45(4). I'll clarify what do I mean. If there is change in the constitution of the partnership form, then in that particular case, what would happen is that here they will definitely be coming out with, I would say, friends, notice to you that have you distributed any asset? Whether partner has withdrawn something, retiring partner has withdrawn something more than his capital balance, and if yes, 45(4) and 9B will be applicable. So in a lighter note, if I say, if you have to report something in 9 small b form 3CD, they will come out with 9 capital B in your assessment, and there is going to be the problem to the partnership. But friends, to be honest with you, this 9 capital B section and section 45(4) is not known to many. If I share in a lighter note my own experience, this was inserted by Honorable Finance Minister in the year 2021, Finance Bill 2021. And in this bill, they have given certain proposals by having 45(4)A and 9B, and thereafter they were having there were various budget meetings. I'm addressing number of association, number of organization on the budget. So I prepared, I addressed. 2021 was I would say second wave of COVID, if you remember. At that time, the bill was passed and has become an act. When it became an act, there were around 140, 150 changes then from bill to the act, wherein the biggest change was 45(4) and 9B. They have drastically changed. What they have proposed was different than what has been passed in the parliament. And that's the reason at that time number of webinars were organized for past bill, that is Finance Act, wherein also I read, I elaborated. After that, on 2nd July 2021, the Finance Ministry came out, or CBD came out with a circular that no, our intention was not saying what you have understood in bill or what you have understood in act. Our intention is this. They've illustrated with illustration that this is what is our intention, this is what we wanted to say. And rule of attribution is given, which is a very nice rule, I would say. Attribution rules are being provided by the Finance Minister. Now what would happen is that if these rules are provided, many of us have not read. I'm honest, friends, I did not read this circular because I thought that still there would be some change. यार कितनी बार पढ़ेंगे हम लोग, ये कितनी बार पढ़ा रहे हैं हमें गवर्नमेंट CEO जाने के बाद भी यार. So I did not. In November 21, I had to address some seminar on 9B and 45(4). Till then, I rejected all the seminars on 45(4) and 9B that no, I will not be taking. The webinars I have rejected, I will not be taking. But in November, I was forced. I was not asked, I was told that you have to address. And at that time, I read. Many are unaware. Let us assume department is also not much aware. But unfortunately, now there is a team of people doing your assessment. So out of the team of 25-30 people, there would be at least one knowledgeable person who is aware about this 45(4), and if there is reporting in 9B, there is going to be application of 45(4) and 9 capital B section in your case, number one. Number two, now there is AI, artificial intelligence. So department software would be very clear. If there is 9 small b in 3 CD, there would be 9 capital B as far as I would say the assessment is concerned. So things may turn out to be problematic, but you have to report compulsory. Nature of business, /profession, and change if any. My code of business, like I'm into manufacturing. Say for example, pen, I will mention the code. If I'm into trading in this pen, I will mention this particular code. Now, what would here happen as far as my firm is concerned? If there is more than one business, then all the businesses need to be very categorically mentioned here. Need to be, I would say, I have to mention. If I have two businesses, trading and manufacturing, both the businesses need to be mentioned. The problem will be when we go to the clause of that ratio. When we go to the clause of the ratio, what would happen is that when there is a clause of the ratio, in the clause of the ratio, friends, I would have, I'll say, only one column, no drop down is given. So I am supposed to put the GP, NP, and turnover in aggregate for trading as well as manufacturing. And if I put everything in aggregate, sir, my position will be, I'll get a composite ratio. I'll not be able to bifurcate what is in trading, what is in manufacturing. Assume till last year I was in trading, now I've started trading as well as current year manufacturing also. So my ratio of last year may be thoroughly different than the current year. And in that very case, there is going to be a big issue which would arise. And that's the reason, friends. It is advisable to have, obviously in ratio, there would be only one ratio, which is a composite ratio. But by way of note, you can have trading, you can have manufacturing, and you can have total ratio for your benefit. I'm not involving into the second issue, which is change in the memorandum, because this is not much relevant. I'll be checking out when I go to 222E. Clause 11 talks about maintenance or other details of books of accounts maintained by me. Sir, this clause is divided into 3 different parts. 44AB talks about list of books of accounts prescribed by the department. Second, under 44AA. Second, list of books of accounts which are maintained and address at which it is maintained. And clause 3 talks about list of books of accounts and documents examined. Try and understand. Here, clause B and clause C, it is the customary tradition, general practice, at least in our Gujarat, to write same books maintained and same books which are examined. We write that we have maintained the books, case book, bank book, ledger, journal, voucher, purchase, sale, and everything same is been examined. Be careful, friends, as a chartered accountant. Please write only those books which you have examined in C. Client may have maintained petty cash book. Put it in B that he has maintained, but don't put it in C. You may not have checked. If you have not checked, don't put it there. Friends, this particular thing, keep in mind, else things may turn out to be problematic. So I would say whatever you have maintained may be different. Whatever the client has maintained may be different than whatever you have checked. Sorry. You have to put the address at which the books of accounts are maintained. It's the era of cloud-based software, friends. So if your client is maintaining the books of accounts on cloud-based software, what is the address? Because it may so happen that he may not be taking the printouts. In that very case, do we need to write name of the service provider? Answer is yes. But generally what we do is that books of accounts maintained, address, client's address. It is client's address. If, say for example, in one permanent account number there are more than 1 HO and 5 branches, then we put these books at HO, these books at branch 1, branch 2, branch 3, branch 4, branch 5. That's fine in general cases. But if it is cloud based, still if we put the address of registered office or address of the client, would it do? At present they are not making any issue. But in my humble opinion, advisable to put the name of the service provider in the given case. Same way, if my client is very small, this was for a big client. Assume my client is very small and my client is, say for example, is having a small provision store in Ahmedabad, Karyanawala, I would say provision store. He is getting his books of accounts written by an accountant in Tally. That accountant is coming every fortnight to my client's place, taking vouchers and other things to his place, preparing the books as his place in Tally, and never ever giving the backup to the client because client does not need. Client is busy with his business. Why client is concerned with what books you maintain or what you tackle? The same with the auditor and tax consultant. So that accountant is coming to my office, getting the books of accounts audited. There is no printout he is providing. He is providing everything online. In that very case, are we supposed to mention in address the place of the accountant? Answer is no. We always mention the place of the client, in spite the Tally backup has been kept at accountant's place. So friends, in that particular case, you are supposed to put up the name of the books and the address at which it is mentioned. Next one talks about presumptive income, which is disclosed in the books, which is offered as a presumptive. I'll elaborate. Assume Mr. X is doing the business of furniture and his turnover is 12 crore. At the same time, his interior designer, his gross receipt is 40 lakhs. Now he is preparing 2 separate sets of books of accounts. Fine. Out of this, in interior designing, he wants to go for presumptive. His income from interior designing, net business income from interior designing is coming to 19,50,000. But he says that out of 40, if I disclose 50%, I don't have to get this set audited. And there were a number of issues in this set. So chartered accountant has advised that, yeah, mere ko problem hoga. There would be a problem to me if I audit this. You saw 20%. Oh, sorry, my mistake. 20 lakh, 50%. Client is showing 50% in the specified profession. Out of 40 lakh turnover, gross receipt in profession is showing 50%. And he's getting the books of manufacturing business, furniture business, sorry, audited. Then in that particular case, his profit and loss account, if we are giving composite for the business and profession, we have to write that out of this 19 lakh 50,000 or whatever the odd figure I have said has been offered for presumptive and hence excluded from the same friends. So that is going to be the issue as far as clause 12 is concerned. Clause 13 talks about method of accounting. It doesn't mean percentage completion or completed contract. It talks about system which is mercantile or cash. And if there is change in the method, then the change need to be mentioned. Not only change need to be mentioned, the quantification effect of this change also need to be mentioned. Like say for example, I am into the profession and I am following cash system. But there are certain issues happening with me. As I'm following cash system, my client deducted TDS on 31st of March 2023. I'm going to get the money in the month of September after I complete the audit. So the TDS made by my client in the year 22-23 is reflected in my AIS of 22-23. Income I'm showing in the year 23-24. Then in that particular case, there would be a mismatch of TDS. Earlier it was a crippling issue. Now, as you are aware, the department is allowing us to carry forward the TDS. So there won't be much issue, but many chartered accountants have shifted from cash system to mercantile system, friends, due to this. If they have shifted from cash to mercantile, in the year in which they have shifted, you have to show that there is change in method. Second, we have to show that if he would have followed cash, what would have been the profit as he has followed mercantile, what is the profit he has shown, by which income tax would decide that whether this change is required by legal statute or required by accounting standard or required for back presentation. If yes, they will adopt and will allow us to move on. If they don't, then I am afraid they would have all the right to make the addition which we have disclosed in clause 13C. That is one. Second, whether the adjustment is required, 13D, whether the adjustment is required to be made in the profit and loss of company due to income computation and disclosure standard called ITDS. Friends, if your answer is yes, give the details which is giving the quantification. I will elaborate. I just met a contractor today itself at 4:15 p.m. I've been to his office. He's there to get his individual return filed by me for various partnership forms covered by audit and certain companies. Now हमारे अहमदाबाद में ऐसा है that client will taste you first, maybe all the part of the country, but वो आपको taste करेगा, giving you some small work, like he's offering me the individual ITRs of the partner rather than offering me the flagship companies or flagship partnership firms. So I'd been there. He has a series of consultants. He's a builder, contractor rather, not builder. So he said that his accountant said, 2 chartered accountants in his team in-house and the account head, chartered accountants both are very new. Account head was very old, rather he's serving him since maybe 30 years or so. Said that it's difficult to give the remuneration to the partner as the firms are not doing much profit. Why firms are not doing much profit? You are saying you have so many contracts which you've got in the recent past. He said that we have got the contract, but the contract is yet not completed. Why not completed? He said we are getting phase-wise payment and still the completion stage of majority of the contract in this firm is 30%, 35%. We've got the money only of 5%, 10%, and we book the revenue only when we receive the money. Now, honestly speaking, this is altogether a wrong practice that contractor is following. He cannot book the revenue when he gets the money for the contract. He should book the revenue as per the percentage completion method provided in the guidance note to ICAIIB. Now I'm not there to change his books of accounts, and I didn't want to comment on the books. But the question arises whether my income tax department will accept or admit the same. In my opinion, no. Because I have ICDS 3, which says that you have to compulsorily follow percentage completion method, sir. And if you are not following, then it is, as an auditor, the duty of the auditor to report in 13D, 13E that as per construction contract, if I would have booked the revenue of 30%, I've got money of only 10, but I would have booked the 30% revenue, then my WIP would be down, my revenue would have been up, and my profit would have gone up. It needs to be categorically. So second, many a person you have seen are doing the business of purchasing and selling the shares. Now what happens when they are purchasing and selling the shares? Then in that case, their shares are their stock in trade. If the shares are their stock in trade, then in that very case, friends, majority cases mein, in accountancy, we are valuing the stock. Say for example, my client has got TCS, Infosys, Reliance, ITC. So we take the cost of all the four, we take the NRV of all the four, and we value whichever is less. But or rather, in accountancy, we value TCS cost or TCS NRV less, Infosys cost, Infosys NRV, whichever is less, and so on and so forth. ICDS, it says it should not be this way. ICDS, it says that you have to value cost of all the four, NRV of all the four, and take whichever is less. Now, because of this, my profit is going to be different in income tax. I am not compelling my client to change the books of accounts, but I have to, as an auditor, report the same in clause 13D, 13E. That due to ICDS, my profit has gone up by this amount. So that is to be done here. Friends, as far as clause 15 is concerned, many people are covered in our Gujarat as of today, friends, as many people have started the land business. I'll clarify. One of my clients was into the business of this chai ke glasses, teacups aate hain na, teacups. He was manufacturing the teacups and selling, but the business was not running good. He was having the money of forefathers, so he was able to survive. But every year when he used to come for the audit, he used to shout that, sir, itni sari fees deni padti hai aapki. Saal mein ek baar lete hain na. We are taking it only once in the year. But he was not able to settle in any of the business. He was having land in the outskirts of Ahmedabad, in a very posh, I mean, not before COVID posh locality, but after COVID, that area has developed like anything. And that client has changed now his business from that glass manufacturing to the construction builder. As he has changed it, he was having this land which was appearing at this capital asset, which now he has changed to stock in trade. When he has changed his land from the capital asset to stock in trade, we have made the reporting in clause 15. Description of the capital asset, land, survey number so and so, and so and so. Date of acquisition, it was acquired by the forefather, say for example in the year 2003, then we will put the date 2003 and cost of acquisition of 2003. But if the land was acquired by forefathers in the year 1985, then it is advisable you can put 1/4/2001 and cost of acquisition to be the stamp duty value 1/4/2001, which is permitted under the topic capital. Fourth is amount at which it is converted into stock in trade. At what amount it gets converted into stock in trade need also to be mentioned. Now 45(2), the section proper says that you have to convert the same at fair market value. At what value, friends? Fair market value. Not at stamp duty. There may be difference in the stamp duty value and the fair market value, but 45(2) is going to tax you on the basis of the fair market value only, because the act is as of today also pretty clear. It's a different story that we are going to argue that, sir, our stamp duty is the fair market value or our circle rate is our fair market value. But whether department will accept this or not is up to the obviously whims of the department. But you have to give the details about whatever the capital asset which are converted during the year from capital asset to stock in trading clause 15 and put all the details. Sir, the clause which is creating the problem, and that is clause 16. Important is this clause talks about the amount not credited to profit and loss account being item falling within the scope of 28, that is 16A. I'll elaborate. A client of mine, like that contractor I was talking about, which I made today, assume I advised him that you have to go for percentage completion. I raised my bill. He paid me the bill and he was very happy because his earlier auditor or chartered accountant has advised for completed contract, and I have advised correctly the percentage completion by which his balance sheet is appearing nice. Just one moment, please. Sorry. So that client is happy and has given me a mobile phone costing 90,000. Now those two chartered accountants to whom I made at his place are very smart. They know that if they want to get the expenditure deductible, they have to pay TDS under section 194R of the Income Tax Act, because they are giving me this benefit of perquisite in the course of my profession. So they made 10,000 as the TDS. Net amount given to me is 90, gross of 10. Friends, in that very case, I have given my individual books of accounts for audit to another chartered accountant who is my tax return filer also. He is filing my tax return. He came to me telling me that, Mr. Palak, where is this mobile phone which you got from your client? I said, I've given it to my wife. She is using. I'm not using. I have my own mobile phone. She likes the same and I've given it to her. Meaning thereby I have not passed any entry of this mobile received by me in my books of accounts. As a chartered accountant, it is the duty of my CA to report this 1 lakh under clause 16A, because the amount is not credited to my income, expenditure or profit and loss account, but it is my taxable income. So it need to be mentioned here. That is one. Second, this would be a very important issue if you are auditing the books of accounts, some of the doctor, because 194R is to hit the doctors only, friends. Majority cases is pharmaceutical company giving freebies to the doctor. The intention is to hit the doctors only. So please be extra cautious and careful for auditing the books of accounts of doctors. Clause 28, sorry, 16B, 16C, I'm not involving. 16D, which is again creating a problem. Any other items of income which are not credited to profit and loss account or income and expenditure account, but it is income of yours, need to be mentioned in clause 16D, and capital receipt, even if not taxable, need to be mentioned in clause 16E. 16D ki baat kare, which is creating a major issue as far as, friends, this 143(1)A is concerned. If I'm not reading the full issue, but I'm elaborating. Assume my client is having business, and in business he's keeping the business sets Plus, he has got personal set of books of accounts also. In business set, he has turnover, he has purchase, he has expenditure related to business and all. In personal set, he has two property which he has let out, he is getting the rent. For the property, he has taken the loan, so loan is outstanding, interest on the loan is there. He has, in the personal set of books of accounts, certain unsecured loan taken, certain unsecured loan given, or certain unsecured loan taken and investment made in the stock market or debentures on which he is getting dividend interest and he is paying interest on the loan which he has taken. Earlier auditor, I am appointed from the current year only. The earlier auditor was not auditing the personal set of books of accounts. The data has come to me from the current year. I have got the NOC from that chartered accountant. My audit manager came to me saying that, sir, this is the issue. What should we do? See, as a chartered accountant, sir, we are fault finders. So, firstly, what we will do is we'll find out the fault in what the old chartered accountant has done. And I said that he has done a wrong practice. He should audit the books of the assessee, not his business. And he has to have both the books to be audited. My audit manager said, sir, he has not audited. What should we do? I said, we should audit both the books. We should give a composite P&L, composite balance sheet, and that's it. My audit manager said that, sir, you are good at conducting the lectures, good at delivering the seminar, webinar, but practicality is not. Try and understand the practicality. The practicality is that if we give a composite balance sheet, then there would be a huge increase in unsecured loan, huge increase in capital balance, by which there are all the chances of client case coming in the scrutiny. So it's a problem, sir. You should not. Same way. She said that, sir, we find out a way. The way is given by our ICI guidance note only. Clause 16 says, 16D says, and obviously 3CD form, that I should audit business set and I should mention all those receipts which are not part of audit in clause 16D. Maybe my rent, maybe my dividend, maybe my interest. There is no problem. Now what happens is, if I'm putting everything in 16D, obviously I'm showing it in house property and I'm showing it in other source also. Still, our income tax department is coming out with 143(1), making addition of whatever I have shown in clause 16D again to my income, and that is obviously not correct. What is a way to get rid of the same? Last year, I have addressed many seminar, webinar on 3CD, and this was an issue which was puzzling everyone, I would say. And wherever I have said that you report, people have got 143(1), and number of chartered accountants called me and said that, sir, should we revise our 3CD and deleting this 16D which you have advised? I said, no, yeah, what we are doing is totally correct. There is a problem with system of the department. What should we do? But chartered are concerned as client is shouting on them that there is tax demand coming in. We are going and filing 150 every now and then. But it's of no use, friends. And that's the reason there need to be some way out. The way out, which is actually not a legal and correct, I'm honest. Here is, sir, what we are doing is, in the given case, we put up the amount in clause 16D. We file the return showing income under the other source, house property, respectively. If at all 143(1)(a) comes, we add the same amount shown in 16D to our business income. We deduct same amount shown in 16D from our business income and keep HP, house property and other source as it is. Your 154 would be passed as per the return filed, original return filed by you, and there won't be any addition. This is not a correct way out, I am clear. But what department is doing is also not correct, sirs. And hence, this is a practical way out. You prepare your return the way you are preparing. Only give two effect to 16D. Make addition in the business income, make deduction in the business income, and you are through. So this was, honestly, I'm admitting, suggested to me by some participant in a seminar that this is what I did and I'm successful and I followed and I'm also successful. So would request you, you can also try the same. Not a correct one, I'm clear, but what department does is also not correct. Clause 17 talks about if I've sold off some capital asset at a value which is less than the stamp duty value, then I have to give the detail of the property, consideration received by me, say for example 10 lakh, value assessed, adopted, assessable by the stamp duty authority, say 12 lakh 30,000. Whether proviso second to section 43 CA or 4th to 56 to 10 is applicable, this talks about, friends, 10% variation, safe harbor is permitted. Like if my property value, I'm selling it at 10 lakh and my stamp duty value is 10 lakh 30,000, then I'm allowed to take 10 lakh as my consideration. But if it is 11 lakh 30,000, then I have to take 11 lakh 30,000. Here I need to report the stamp duty value, and here I don't need to report the fair market value. If it is the stamp duty value as on the date of agreement to sale, I will report the stamp duty value as on the date of agreement to sale. Friends, clause 18 talks about depreciation. Now in this 18 clause, the thing which you need to take care is addition and subtraction, addition and deletion, and addition for full rate and for half rate. As far as this clause of depreciation is concerned, two things I have important from my side. One, if my assessee is manufacturer, purchased machinery last year of 100 rupee, got 15 rupee normal debris, got 20 rupee additional debris. So his WDV is coming to 65, and which is his opening value of the block. Now, till last year he was in the old regime and he was allowed to get additional depreciation. His opening is 65. Current year he bought the new machinery, got 200 rupee. On this new machinery, if he goes for the new regime, he'll not be able to get additional debris on this 200. He'll be able to get normal debris on 65 and 200. Last year he was in old regime, but he was having losses. So this 50 rupee debris, and I would say his 20 rupee additional debris remain unabsorbed. Now, if he wants to go for the new regime, he cannot get additional debris on this 200 rupee asset purchased by him in the current year, plus that 20 rupee additional debris which he claimed last year, which is lying in the unabsorbed depreciation, also cannot be carried forward by him. But my income tax department is giving the benefit to the assessee, saying that you cannot carry forward the 20 rupee unabsorbed depreciation due to additional depreciation, but that 20 rupee can be added to the block, and that adjustment can be made in 0.2 CA of your block. So don't forget to make this particular adjustment here. You can make the adjustment, number one. Number two, certain other important issues I have, which are, number one, if I bought the capital asset exceeding 10,000, now as per proviso to section 43(1), and this is not my actual cost. If it is not actual cost, need this be capitalized in the block? Majority view says that it need not be capitalized in the block. The reason being, it is not permitted under section 43(1) to get it capitalized. But be careful about the position of the asset when it is sold off. If it is movable, department may lose the revenue because we have not claimed the depreciation. So we may try and argue that this is movable asset on which depreciation is not claimed. In no case, department would be able to find out that it is my asset which is used for business without depreciation due to proviso to 43(1). That is one. Second is general. I have bought the motor car of 20 lakh on which assume 18% is the GST. I'm not much aware about what is the GST because it is not my subject. But 360 is the GST I have paid. So 2360 is the total value of my motor car. As ITC on the motor car is not allowed, I can capitalize full 23,60,000. But had this been machinery, I would be able to get ITC of 360 and I can capitalize only 20. If I'm using my motor car of say 23,60,000 both for business and personal purpose, then Say for example, personal is 20 and business is 80. I need to capitalize full amount. I need to compute depreciation also full. But by 30th I have to make the disallowance of 20% depreciation, but it block the whole amount will enter. Next clause talks about the admissible expenditure under clause 19. Like if you are claiming 35AD, mine is a hospital of more than 100 patient bed. And as it is hospital for more than 100 patient bed, in accountancy, building purchased at 100 rupee would be depreciated at 10% and 10 rupees debited to profit and loss account, while in the income tax I'm going to get the deduction of full 100 rupee. So in clause 19 I would mention amount debited to profit and loss account 10 and amount allowed under section 35AD full 100 rupee. So that is to be mentioned. Very I would say very less cases are there to get covered, but yes, it is there. Clause 20, which is going to create a big issue because now there is amendment in the law itself. Clause 20 talks about employee benefit. If there is 100 rupee salary paid by employer to employee, on 100 rupee employee is contributing 12 rupee to the PF account of the employee. An employee is also giving 12 rupee from his own pocket, from the 100 he has got, to the employer to get it deposited into the PF. Then for the 12 rupee given by employee to employer, which is to be deposited by employer to the PF, this particular clause will come. The beauty of this clause is it talks about employee's contribution, which is governed by section 36(1)(5)(a), not 43(b). You have to mention the name of the fund, PF, RPF, sum received from employee 12 rupee, actual amount paid 12 rupee, due date of under the relevant act 15th of next month, deposited. Say for example, it is the PF belonging to October 22, then due date will be 15th November, the actual date of deposit 30th November, or actual deposit date of deposit 17th November. If it is 17th November, automatically there would be disallowance. Even if I have not made the disallowance while filing the return, automatically there is going to be disallowance in 143(1). So this fact should be carefully kept in mind, that it need to be deposited on or before the due date. Now there is a very categorical amendment in the law. So all those old judgments of Mumbai ITAT or all those old judgments of other the jurisdiction, court or tribunal, in spite Gujarat High Court was totally against, saying that it has to be disallowed as it is governed by 36(1)(5)(a), but all those judgments are no longer applicable. Clause 21 talks about admissibility of certain deductions, which is talking about capital expenditure or personal expenditure or cash expenditure or penalty for violation of any law, any donation to the souvenir or brochure of the political party, or certain disallowance, which talks about any payment made to non-resident on which TDS is not done, which need to be disallowed. Same way, any payment made to resident on which TDS is not made, 30% of the same is going to be disallowed, and all other stories related to FPT vagera, wherein I am not involving myself. Friends, at the same time, partner remuneration, what you have paid and what is been allowed, need also to be mentioned in this particular clause. Next is payment made to relative. Now the important issue here is that you need to mention the name of the relative, fund account number, nature of payment and amount of payment. You don't have to mention whether the payment made by you is genuine or ingenuine, whether the payment made by you is excessive or not. You have to mention the nature of payment and amount of payment. Let the department decides whether it is reasonable or not. Another very important issue to be kept in mind is who is your relative. For an individual, his relative would cover spouse, brother, sister, lineally ascendant and descendant of himself. My relative would be ascendant descendant for me, not for my spouse. My spouse is my relative. My real brother, sister are my relative, but my father-in-law is not my relative. So if I am making some payment to my father-in-law, there is no need to report in 48. That's all. To play safe, it need to be reported by. To play safe, if you report and if my department says that this is unreasonable and they disallow, there is going to be a problem. So when there is a legal thing, there is no question or there is no point for us to play safe. So if you don't report, it would definitely do. 43B current year, there is no much problem as the clause remains the same next year due to this payment to micro and small enterprise. Things are going to be tough, but luckily it is not there in the current year reporting, so I'm not involving in those micro small amendment by 2023 yet. Let us have clause 26. It talks about, friends, any amount of expenditure like expenditure of bonus commission to employee or interest on loan to bank or interest on loan to now NBFC, yeah, government dues, leave encashment, etc. If they are existed on the first day of the financial year, assume on 1/4/2022 they were outstanding and they were not allowed in PY 21-22 because it must not have been paid on or before the due date of PY 21-22. So it must have been disallowed in the year 21-22. Whether it is paid in the year 22-23, if yes, I have to mention in clause A, 26 A. If I have paid, I have to mention in 26 capital A, small a. If I have not paid, I have to mention in 26 capital A, small b. Friends, if I mention in capital A, small a, then it would be, even if not debited to profit and loss account, expenditure will be allowed to be on 43B basis. Assume if it is incurred in the current year and it is paid by me on or before the due date of filing of return, then I need to mention in B, small a. If it is not paid on or before the due date of filing of return, I need to mention in B, small b. Now, if you mention in B, small b, then expenditure is going to be disallowable. This is the list of the expenditure which are covered in 43B. All of us are aware, so I'm not much involving, but mind well that illustration I was taking for employee's salary 100 rupee and employer contributing 12, that 12 rupee employer contribution to PF would be governed by clause 26. It would be governed by 26, and employee contribution of 12 would be governed by the earlier clause, as we have discussed. For that earlier clause, due date under the relevant act for October 22 payment 15 November would be applicable, but employer contribution October 22 payment, the due date under the Income Tax Act under section 139(1) will be applicable. Issue will be you are signing the audit report on 25th of September. Why you are allowed to make this payment up to 31st of October? If client wants to make the payment between 25th of September to 31st of October, can you rely on the promise given by client that he will pay? No, you should not. You should tell him either come, make the payment first and then come to me, or you put it in B, small b. When he pays, revise the audit report. But I'm honest, don't rely on what client says. Friends, if the company is issuing the shares at a value which is higher than the fair market, then in that very case, friends, this need to be reported. This reporting would be coming into play only and only for, friends, company assessee, no one else. Which is, say for example, my share is of 10 rupee face value. My fair market value of the share is 15. I've issued at 25. Then this fact need to be reported here that I've issued at 25. Now, another point to be kept in mind, friends, here is that if, say, fair market value, there is rule 11 UA which would be applicable for deciding the fair market value. If you report something in this particular clause which is required to be reported, then there is going to be addition to the company under section 56(2)(7)(b) of the Income Tax Act. See, at this moment, I would like to clarify that the addition is made under the head income from other source to the company. I also would like to clarify that we are auditing the business set of books of accounts, but it is duty of the chartered accountant to report all this because we are auditing. Fine, that report of GP, NP 269 SST would be from the business set, but as you are auditor of the particular permanent account number, that permanent account number may have income under that other source, and that's the reason under clause 29A and 29B you are asked to report if there is any advance forfeited due to cancellation of agreement to sale for the capital asset, or 29B talks about any gift received by you from non-relative which is taxable and need to be reported here. So nature and amount of gift need to be reported in 29A, 29B. clause 31A and 31C are important for 269 SST. Wherein you need to mention the name and address and permanent account number, amount of loan deposit accepted, whether the loan is taken during the year, whether the account is paid up during the year, maximum amount outstanding, whether it is by account paycheck or what. I'll clarify what do I mean. Assume during the year, I have taken a loan of 1 lakh rupee from Mr. X by account paycheck, and I have repaid him 60,000 by account paycheck. Then in clause 31A, I would mention Mr. X, his permit account number, acceptance of loan 1 lakh, whether the account is squared off no, maximum outstanding balance 1 lakh. As I have repaid 60,000, I would mention in the reporting of 269T 60,000 repaid. Now, had this been acceptance or repayment by other than account paycheck, I need to mention that fact in the drop down, whether it is by account paycheck. If no, other than account paycheck, I have to mention others. And if I mention others, boss, you should be ready to have 271D penalty or 271E penalty notice. But reporting is must. Important issue is not only this. 31BA talks about reporting for clause 269 ST. I will justify. Very recently, our consultancy firm, which is yet not subject matter of GST, as we have not crossed 20 lakh rupee, we have just started. Last year, I'm talking about, we have just started last year. And we had not crossed 20 lakh last year. So we're not subjected to GST. One of the client whose GST matter we have adjudicated, I mean, we have fought with the authority, we have won the matter, and client paid us 3 lakh rupee by cash. Client did not want to show this in his books. He said 3 lakh rupee I am giving by cash. We are very genuine. We decided to show it in our books of accounts. Now if we show cash account debit to income account credit 3 lakh, there is no question of paying GST on the same. Obviously we have to pay the income taxes. We were not covered by GST. There is no question of paying GST on the same. But if we show that one client has paid us for one matter 3 lakh rupee on a single day, then I am afraid we are covered by 269 ST and there is going to be penalty. And my chartered accountant has to report the same. So what planning we did? We made the planning this way. Client A 150, client B 150. 269 ST is applicable only if I receive in a day for an event from one person. If I've got it today from A and today from B, or I've got from A today, got from B tomorrow, 150, 150. There is no problem. If it is about 2 lakh, rather 2 lakh and above, the reporting under this clause is required. For SST, reporting is required for 20,000 or more. Clause 32 talks about details of brought forward loss, wherein you have to put the assessment here. You have to have nature of loss like business or capital gain or HP, amount as per return, all losses, etc. not allowed under section 115 BSC BAD. That is that unabsorbed depreciation wala part due to additional depreciation we have talked about. Whether any amount of adjustment by withdrawal of additional depreciation under BSC BAD, my mistake, it could be coming over here. That earlier column was talking about loss which cannot be carried forward due to say scientific research donation or whatever. Amount assessed, if there is different amount assessed than the return, it may so happen that I have filed my return of 8 lakh rupee loss and now assessment is only at 6 lakh rupee loss due to 2 lakh rupee being disallowed. Then in assessed loss, I have to have 6 lakhs. And in remark column, I can put that appeal to CIT appeal is pending or appeal to ITAT is pending. And I can have that in the remark column. But this clause need to be reported. Same way, it talks about not only the losses, but it talks about unabsorbed depreciation also, which needs to be furnished. General deduction details. And nowadays department is becoming pretty strict on the chartered accountant. We have seen many notices on the social media issued by income tax department to the client asking, are you filing your return on your own or through some tax consultant, tax practitioner, some chartered accountant? Name him. Have you provided all the details or chartered accountant has taken ATC on his own? Yeah, ATD on his own. Friends, my humble request is be safe. Get the things in writing from the client that he has given you the receipt of ATC. It's our customary, it is our tradition, it is our gesture, it is our kindness to tell client कि आपके capital account से इतना LIC का premium मिला है, I am claiming it as ATC. Let him say, let his accountant says. Else, अगर उन्होंने नरेशन कुछ अलग लिख दी होगी या भूल से LIC लिख दी होगी और आपने ले लिया, you will be under trouble. But coming to the audit report, as a chartered accountant, you need to report the deductions under ATC, ATD, ATGGC or whatnot. Now assume chartered accountant has not reported any deduction. Tax return preparer is different, and tax return preparer now is getting the receipt and wants to claim the same. Can he claim? Answer is yes. There is going to be mismatch between audit report and the ITR, but definitely 143(1)A आए तो भी you would be able to justify. But as an auditor, when you are signing the audit report, unless you are getting the receipt of ATC, ATD, ATGGC, which is reliable, please don't report in clause 33 for the deduction. Let the deduction be claimed in the return by the client. Even if you yourself is filing the return, you can claim. But to mention in audit report, there has to be specific proof, else please don't mention. Friends, they are talking about TDS. Friends, if you have lesser deduction or more deduction, let me check. Clause 34 goes this way. Your TAN number, section under which TDS is required to be made is second column, that is 194A. Nature of payment, interest other than security. Total payment set 10 lakh. Total amount on which TDS is required to be made 9,50,000. 50,000 are small amount to people on which TDS is not required to be made. Total amount on which TDS is required to be made at a specified rate, say 7 lakh. On 7 lakh, TDS is made worth 70,000, which would be put in column number 7. Total amount on which TDS is required to be made at less than the prescribed rate. Prescribed rate under 194A is 10%, but less than prescribed rate means someone has issued you 15G, 15H or 15AA. So that is 2,50,000 on which you have made the TDS worth, say for example, 10,000 only. Someone has issued you 15AA, due to which the TDS is made at the rate of 5%, 2 lakh rupee loan on which you have made the 2 lakh rupee interest on which you have made the TDS at the rate of 5%, that is coming to 10,000, which should be shown in column number 9. And out of column number 6, sorry, my mistake, out of column numbers, the TDS made by you, what amount is not deposited by you? Not deposited on the date of signing the audit report should be mentioned in clause 10. If you have not deposited this money, then 30% of your expenditure is going to be disallowed by the department automatically, even if you have not disallowed in your return. And here they require the date of type of form 26Q, 24Q, due date of furnishing, say for example 31st May, date of furnishing say 2nd of June, and they are asking you to report whether all the transactions are mentioned or not. And this is something strange here. How can I report whether all the transactions are mentioned or not? And that's the reason, friends. This is an extra liability, a heavy liability on our assessees. But you have to mention the interest also. Quantitative details by the assessee should be mentioned over here in clause 35. Important to note that in the GST, someone was telling me yesterday, it is compulsory that you have to produce the stock register to the GST department. And if you have written here that it is not practically possible to maintain the stock register, and there you are producing the stock register, I afraid now the departments are interlinked, so it is going to create a problem. Give the details about your raw material and finished goods. WIP, no details are being called for, but quantitative details are here required in clause 35. 36A talks about deemed dividend. Assume Palak individual is director and substantial interest holder in some company, and that company has given me, the loan company is profit making company, then this loan will be deemed dividend for me under section 222E. Then in that case, it is the duty of the auditor to report that either there is any 222E or not. If the auditor is reporting here, then in schedule OS, that is a return, in deemed dividend 222, it would be automatic addition under 143(1). So the auditor has to report amount received and date of receipt over here, and that is compulsory. Turnover, sorry, my mistake. Ratios are to be reported in clause 40. I'm discussing only the important clauses, wherein GP ratio, NP ratio, stock turnover ratio, and material consumed ratio for current year and earlier year need to be mentioned here. Now, as we have discussed, if assessee has two business, there would be composite ratio coming in, but by way of note, you can give the individual ratio also. And if there is a big mismatch in the ratio, huge decline in GP or huge decline in NP, department is going to raise the question. So please be ready right from the beginning, the reason for the decline in GP or decline in the NP. And friends, to discuss the last clause from my side, clause 44, bit confusion, whether we should report or whether we should put up a note. Many chartered accountants are putting up a note that it is practically impractical, impossible to get the details and hence not reported. Whether it would serve the purpose or not. Last year, I started the tax audit seminars from July. It was Surat wherein I was called first for the tax audit seminar, wherein at that time the clause was very new and someone asked me, I was saying that it need to be reported. Many questions were coming in that, sir, should we report or should we not, or this, that. I said it is advisable to report, it is mandatory to report. What is the reporting? The reporting goes this way. This is related to GST. It talks about the breakup of total expenditure of entities registered or not registered under the GST. It is serial number. Thereafter, total expenditure incurred during the year, expenditure in respect of entities registered under the GST. तो ये ब्लू कलर वाले जो चार कॉलम है ना, वो बीच में से लाइन डिलीट करनी रह गई है. It is to be read this way: expenditure in respect of entities registered under the GST. And बाजू में expenditure in respect of entities not registered under the GST. So during the year I have made the purchases from worth rupees say 2 crore. Out of 2 crore, expenditure in respect of entities not registered under the GST है 20 lakh. तो registered under the GST आएगा कितना friends? Can I say it is 1 crore 80 lakh? अब ये 1 crore 80 lakh का ये लोग बाइफर्केशन पूछ रहे हैं. क्या बाइफर्केशन पूछ रहे हैं? Relating to goods or services exempt from GST. मैंने जो परचेज किया, मेरा परचेज GST में exempt था. जो सेलर रजिस्टर्ड है बट सेलर ने मुझे दिया वो exempt है. Then I have to mention that particular amount in 3. Composition वालों से मैंने परचेज किया जिसकी मुझे ITC नहीं मिल सकती. I have to mention that in clause 4. And जिसकी मैं ITC लेने वाला हूं नॉर्मल से लिया, that I have to mention in 5. And 3, 4 plus 5 total to 6. And 6 and 7 would be total to the 2. That is my total expenditure. The question here arises, whether reporting of capital expenditure is must? Yes. Expenditure would cover any expenditure. You are going to get the credit of the capex also. So reporting of capital expenditure machine liya, it need to be reported. Whether headwise reporting or aggregate, I was saying headwise, but our institute guidance note says that even if you report aggregate, it would do. Purchase of goods to be reported? Yes, purchase of goods need to be reported compulsorily because I've given the illustration also as purchased, and I'm honest that purchase is also your expenditure, so it needs to be reported. Now coming to last year's seminars and webinars. The first seminar was at Surat. I said clause 44 is applicable. Someone and many asked that is it compulsory? I said yes. One gentleman from the audience asked me that, sir, are you reporting in your office? Honestly admitting, at that time not a single audit report was ready from my office because we were busy with ITR filing. But I said as a speaker, and we have to friends number of times, that yes, we are reporting. Then it was followed by various webinars. I'm thankful to Virag Bhai, he gave me the opportunity last year also for the same topic. Wherein also someone asked and I said, thus, yes, we are reporting. Thereafter, there were other webinars also, wherein also I said, yes, we are reporting. Then we started actual audit. My audit manager came to me asking, clause 44 ka kya karenge? This is the audit report of this big firm of Ahmedabad, which has given the note that they are not reporting. This is another big firm, given the note, this is another big firm. So ours is a medium-based firm. We should not report. My answer was, यार उनके पार्टनर्स वेबिनार सेमिनार लेने जाते नहीं हैं और मेरे जैसी बड़ी बड़ी बातें नहीं करके आते. Their partner or employees, senior persons are not going to conduct webinar, are not conducting webinars or seminars and not talking big things like me that we are reporting, we are reporting. I have stated in various webinars and seminars that my firm is reporting. So if some report of our firm comes to someone's hand wherein reporting is not done, it would look bad on my part. So we have to report compulsorily. And friends, we are reporting. My whole staff was so angry on me and was telling in Gujarati, Amna seminar, webinar kyare bandh thase. If I translate, when these gentlemen will stop conducting seminar and webinars and putting us under the trouble. But friends, the fact is, it is advisable, not advisable, it is mandatory for us to report. Friends, this was my presentation on the clause to clause or other important clause analysis of form number 3CD. Thank you very much, Virag Bhai, and thank you all the members, all the participants, the audience, seniors and members for giving me this opportunity. Over to you, Virag Bhai.
Thank you so much, sir. Sir, can you open the question tab? We have a few questions from the participants, so yeah, that will be very easy, sir.
Where to open? And I mean,
the control panel is there. In that question is there.
Yeah, I'm having that questions. I can see only one question, return allowed or not. Can you share the PPT? Yes. Sir, how to view this? Actually, I'm not much acquainted.
Sir, there is a question tab on the control panel. In that, there is a square box. Undock pen from control panel that you have to do.
Got it, sir. Thank you.
Okay.
Yeah, I can read and reply. Net profit 44%. I know that is not the first one. No video. I am unable to watch the video, not able to see the screen, only audio. Okay. What should be the address for proprietorship form? Official address or residential address? As per PAN database, residential address is mentioned. In my case, my PAN gives my residential address, so I'm putting the residential address. So it should be, in my opinion, the residential address. Proprietary SSC died on 1st August 2023, but his gross receipt is more than 50 lakh. What should be the name entered into the name column? It should be the name of the deceased, but the audit report need to be accepted in the permit account number of the legal representative. Now, if turnover is less than 1 crore, then audit is not required if previously not taken 4480. Yes, Puneet Kumar ji ka question bilkul valid hai, but I'm not involving into the nitty-gritty of AB and AD because there is a need of one separate seminar on the same. There is one opinion that if earlier year the audit is not done, current year audit is not required, fine. There was a network issue, Virag Bhai. Okay. So in case of FO intraday share market transaction, if HSE is having loss, do he has to carry out tax audit? Answer is under 44 AD. Yes, he has to carry out the audit if the turnover is up to 2 crore and he has the loss. Subject to obviously 4484, wherein his income should be above the exemption limit because of the other income. Dear sir, individual is LIC agent, total receipt is 29.70 lakh. Cash transactions are below 1% of total receipt. filed ITR 3, declaring net profit 44%. Total receipt, sir. Is it rightly done? Kindly take up this. I think there is no problem at all. There is no problem. Radhesamji, I think whatever you have done is perfectly correct. In clause 17, word is transferred. Is it mean sale or purchase or both? No. For us, when we are transferring, same way, clause 17 also deals with, if I check out, if we check with the clause number 17, a moment please. Just a moment please. See, this talks about the transfer, but at the same time, if you refer to the clause, it also talks about making addition under 56, and 56 is possible. Gift is possible only when there is some purchase. So I'm afraid it may be purchase or sale both. Whether the reporting to be made net of GST or including GST. Jitesh ji ka question hai, reporting including GST or net of GST for which clause, Jiten ji? And Chaurangi sales bill, you can rely, it is depending upon the method of accounting followed by, but it is without GST. Namita ji says, need to understand 16D again. 16D talks about if you've not credited some income which are belonging to other heads, maybe house property or maybe business or maybe cap gain, in the income expenditure or profit and loss account which is taxable, then it need to be reported in clause 16D. PPT definitely I'm going to share immediately in Nimesh and with Virag Bhai, and he will circulate, or if there is any other method I can do the same. Hi, change in the depreciation method from WDV. Oh, Krishna ji, there is no permission to change the method from WDV to SLM as far as Income Tax Act is concerned, except you are power generation SSC, and in power generation SSC also change of method is not permitted for the particular asset. So I think this question would not come in the Income Tax Act, it would come in the accountancy. Please share the link, or how can we get? I'll share it. If you can give me some way out to share it over here, I can share it over here only. Turnover is 1.5 crore and cash receipt payment is less than 5%. Can you show 6% to follow 4480? In my humble opinion, yes. Audit of DC SSC, I have answered. Or to get the tax audit done. 4480, he can go for if he is declaring 6% and if it is less than 5%. So I think I'm answering whatever the questions raised here. Virag, is there any way out I can share the PowerPoint presentation or PDF over here?
Sir, in a handout section, you can upload the PPT, sir.
Where, sir?
Handout.
Handout, okay.
In control panel, after the question, there is a handout section. In that, you can upload PPT or PDF.
Just a moment, sir. I can see audio, then dashboard.
Okay, sir, you can send me. I will share with all.
I'll WhatsApp you very immediately after
okay.
the.
Okay, sir. We'll send by mail to all that.
Yeah.
Yes. So thank you so much, sir, for the wonderful deliberation and answering all the questions raised by participants. It's a great session, sir. I can see that all the participants were attended in the beginning till the time of your presentation. All were there, and there is no dropout. And even on LinkedIn and on YouTube also, people have taken the benefit of your session, sir. So thank you once again, sir, for the wonderful deliberation, and it will be really helpful in this tax audit season to all the attendees, sir. and many will watch in future also, sir. Let me tell you, sir, last year a video on YouTube also across more than 4,000 plus views on YouTube, sir. So thank you so much, sir, once again, sir.
Thank you, Virag bhai. Thank you all the participants. Thanks a lot for opportunity.
So thank you all the attendees. Will we share more knowledge sharing session? Be in connect with on all our social media handle. Thank you all. Thank you, sir, once again, and thank you Vikash Jain, sir, for addressing a wonderful keynote address in his absence. We are thankful to him as well for sharing his knowledge and time for all the attendees. Thank you all. Thank you, sir. Thank you.